Hello traders, welcome back to our channel here at TradePro Academy, and this is going to be our 7th part to our free futures trading course here on YouTube. Today we're going to be breaking down my strategy in its entirety, everything put together. So far we've been breaking down things piece by piece, but today we're going to see it in action. Going from analysis all the way to execution, we'll look at some trades, we'll also break down a few little replay examples of when to actually pull the trigger, because execution is everything in trading. We can plan and plan and plan, but analysis paralysis might eat us up. So if you guys are excited for that, let's dive right into the screens. I'll see you guys there. And remember to hit that like button, hit that subscribe button, and let's dive right into this video. So we are back at the screens and we've got a lot to break down, right? First and foremost, we got to start from the top. So far, we've talked about looking at context through trading plans. We've talked about the volume profile. We've used order flow with Delta. We've used order flow with the footprint, and we've talked about execution. We're going to wrap all that up in a neat package so that we can break down my strategy in its entirety realistically, and we're going to be talking about the recipe for a trade, right? The recipe for a trade is fairly simple, right? Now, realistically, the outcome is always going to be fairly unknown, but what we're trying to do is stack the probabilities in our favor so that we have some better opportunities in the market. So let's break this down. There's 6 general steps that create a solid trade idea, at least, or a solid trade. So the recipe for a trade is, first we're going to start off with plan, right? Plan with context. We always want to plan for whatever kind of trade that we're looking for, our general analysis, so that we can get a breakdown of context. Context is going to be the key deliverable for our directionality, where we want to trade. Step number 2, right, we want to build the trade idea around our analysis and our context. The whole point of us creating a trade plan is so that we can actually have trade setups, right, and ideas to follow through with and actually execute. Step number 3, we want to identify the potential and the risks of the trade. We talked about that in execution in the last video. When I get into a trade, I don't want to just get into a trade because, oh, okay, the entry looks good. I have to understand what my risks are on this trade. I have to understand what the actual potential of the move of the trade is, and then I can start getting into it. Does it make sense? Is this trade that I'm getting into negative risk to reward? Is it positive? Does it have good expectancy, right? All these things I want to cover before I even get into a trade. Then Part 4, we want to confirm the trade. This is where we start talking about order flow and we start talking about even some price action triggers, whatever the case is. And then step number 5, we enter and we manage that risk, right? We want to manage the trade, but we don't want to over-manage it. There's a fine line between over-management and actually managing the trade properly. And then step number 6, maybe one of the most important steps out of all this for the simplicity of a trade, is actually reviewing said trade, breaking down the trade, seeing what's going on, what went well, what went poorly, how can we continue and succeed with this going forth. So we're going to be breaking all of that down, right? We're going to start just in a second. Next video is going to be the last video of this futures day trading course before we go into the live recording of our full new course here at TradePro Academy. So you guys don't want to miss that out. We'll be running a discount for that live recording, so I'll see you guys there. But when we talk about our system, right, and we talk about the breakdown and the recipe of a trade. First, when it comes to building a profitable system, a trading edge, you have to take it one step at a time, one trade at a time. Be present with that trade and don't let the P&L influence aspects of your trading, any of the aspects of your trading. So how we can do this, right, is by having rules and following said rules. Fairly simple to a degree, but what does that look like? First and foremost, step number 1, I want to create a trade plan, right? We'll look at NASDAQ, we can look at the S&P, it doesn't really matter, equities here. So we want to create a trade plan every day on a day-by-day basis, right? What we have to understand in the creation of this trade plan is that we have to make it malleable. What does that mean? That means that even though I do want to be biased, because bias does have conviction, if we're doubting our direction, our trades, we fumble before we even get in, right? Bias is solid, but it has to be malleable bias. The trade plan has to be fairly malleable. What I mean by this is not changing your mind at every turn of the market, but having very key identifiable areas of where you want to stay long, where you want to go short, what potential turning points look like in the market, right? So on and so forth. I want to cover all the bases. What kind of context does the market present, and what is the direction? So I start with the volume profile to build context and the trade plan. Very simple from that regard. Step number one, right? This is going to be a quick review. We want to identify where the large distributions are. So what do I do with this? How do I create context? How do I start my plan? I'm looking at the overall larger volume profile here, a huge composite, a 200-day maybe, right? 300-day, 100-day, it doesn't necessarily matter. What I'm trying to do is I'm trying to set out a composite profile that gives me a very, very important thing, balances. Where are the balances in the market, right? Where are these large distributions? These large balances in the market, they create value, right? Strong-handed market participants, they want to get active at the extremes of the value to be able to create some kind of directionality. Auction market theory, right? That's how we're trying to break all this down. What I'm doing with these large composite profiles is identifying where value is, and the extremes of that value is going to be the area that I trade. So with that value, I can get directionality out of the market as well. So first and foremost, step number one, okay, let's just draw out where all of these balances are on a composite profile, where the value is. What I'm generally trying to do is find the biggest drop-off that creates the belly, right? Maybe I could have it up here. It doesn't necessarily matter too much. Within these balances, overall, there might be areas in between that could create some kind of support resistance as well. So these are the general pieces of information. This is the two general balances that we have. I want to make sure that they're wide, right? So when I have that, I want to identify the direction of the market movement based on these large distributions. So what I'm doing is I'm seeing how markets move through these distributions, how they move within, how they fail, right, some of these distributions, and what goes on with that. Where is price in relation to the distribution? How did it actually get there if I'm looking at the large composite? So that's how I get my direction, get an understanding of what's going on. So let's take a look at this, right? Over the last few days, what we've done is markets have moved from the upside to the downside within this balance, meaning that there is bearish pressure, and meaning that we're trying to look for areas where the sell side can continue, right? Meaning that if we move into the balance, they want to sell the top band, they want to sell under areas within the balance, they want to sell under the bottom of the balance to target the next balance to the downside. If we accept into another balance, it continues bearish. So, okay, we get that acceptance. Yesterday there's a little failure at the bottom of the balance, and also there's a close back above one of the balances. When this happens, based on auction market theory, there's a slight expectation that there's bullish movement. Now, the thing is, there's not a huge change in structure, a confirmed change in structure, until markets move into a new balance, higher or lower. So realistically, if I want to be really bullish, I need to wait for this market to actually expand above this distribution top so that we can continue that upside momentum. So right now, it's kind of mixed with a slight degree of bullishness. So when I look at that, my main thought process is that I'm going to be trading the key extremes of these balances. So that means this top, right, this bottom, this midpoint area, this top. So if I'm looking at this 400 points of movement, I've got about like 6 areas to trade here on the NASDAQ. So if I'm looking at this directionally, we left the bottom balance. The idea is we want to hold the top of this balance that we left. More so, we want to move into the higher balance if there's going to be bullish momentum, right? You can see on the overnight so far that we've failed. Now, the third step in this analysis with these volume profiles is analyzing the individual profile sessions in relation to the composite profiles. So we could use the weekly to give us a little more insight, but we could also just look at the individual day profiles. The individual day profiles, they have their own little balances, they have their own shapes, and we want to see if that comes into confluence with any of the large areas. So, for instance, we have this larger composite balance here into the lows, right? So markets, they close back above the area after failing to move within. That's a sign of some bullishness. You have the volume drop off where volume starts to get red, where the balance of the individual day is right at the top band of this composite profile value region here. So that tells me that, okay, this is going to be an area of heavier support. There's confluence on the individual session, there's confluence on the larger session to see if we can make the move higher, right? You can look at the overnight, there's like a double distribution here. We can look at this profile as well to give us more insight as to areas that have significance that we may want to trade. So I'm going to be breaking those aspects down so I know, okay, where are we? What is the general bias right now, and how does it continue and how does it fail? From this, we can create a trade plan, and our goal is to create trade ideas. Let's generate trade ideas. So if I look at the most recent movement, what does it tell us? We have this balance down here, we have this general larger balance, and we have some midpoints over here. So we failed to move and close within here. We close up here between the two major balances on this NASDAQ. So I have a support area here based on the individual session profile balance, volume drop-off, as well as the composite. Meaning that I want to look for some kind of longs to see if we can get that momentum move higher. So trade idea number one, right on the overnight, if you're trading the ETH, I want to be long somewhere around that, like, let's say 560 to 580. The target is going to be the top band over here, the start of this balance at 660 maybe, where the volume drops off on the individual session as well. So that's trade idea number one. If we're going to see if the momentum wants to continue, we want to see if we can actually get the acceptance above this area. So it's like do or die. Let's see if we can hold this area and then push higher. Trade idea number two, when we actually accept into a higher balance, a higher value, what happens is there's bullish momentum. So if we get a move like this and we look to hold the bottom band of this balance over here, 660, you can see volume drop off, huge composite drop off. We have the expectation of a stronger momentum move to the upside. That's where the bulls win. What's the bearish scenario? Bearish scenario is that they fail from here and there's a move back under this balance. So realistically, all I'm doing is I'm trying to abuse two levels. That's all, right? Two levels to make sense of this plan and to generate those trade ideas. I've created about 4 trade ideas, 2 for each side, bullish and bearish, just with 2 different levels. That's all I need to trade. I just need to wait to see who takes control. Now, naturally, I do have a slight lean bias bullish because of the move back above the balance, right? That's giving us some kind of directionality that, okay, these guys are going to attempt to actually continue the failure from yesterday. And then if I take this information that we have and I look at it from the perspective from the overnight to create a plan for the current day session, when the RTH opens, what I'll notice is that, okay, we made the move higher, we failed over here. The sell side is still kind of in control, right? I'm a bit iffy. It's kind of last chance that these buyers try to hold. So the trade plan ultimately remains the same, right? So we can rank them in terms of probabilities as well, based on the current trend. The current trend is a little more bearish over the last few days. The fact that we're between two large balances, much of anything can realistically go. It really depends on where the actual session closes so that we can see what actually happens for the movement on the RTH. Because if we start closing above here, somewhere down here, then the bias is a lot stronger for that direction, right? Upside or downside. Some of the nuances that we might want to take into consideration if we're looking at extended trading hour session to make a plan for the regular trading hour session is that the main thing, I want to see if the extended trading hour session created a very large move, right? If it's a large expansion with super thin volume, then you have the potential to reverse those moves, right? When I see those like large extensions on the overnight sessions, like something like, let's see over here, that has very thin volume, right? Something like this, that you have this huge expansion. We have a move from 24,100 all the way to 24, almost 300. When you have these like large extensions on the overnight, especially if they're news driven, what happens is that there's generally a reversal in price, right? You have this large extension over here, you generally have an RTH reversal. So something to keep in mind. When you get too far on an ETH session, looking for the follow through may not be the number one thing to do. Obviously, if there's like heavy bearish momentum, people are going to look at this and say, okay, more and more and more. But it's going to be very tough trying to short a massive downside move or trying to buy a massive upside move after a low volume expansion on the overnight, right? Something to consider. So all this analysis, all this breakdown, okay, fantastic. Then we start getting into execution. So this is where a lot of traders struggle. Most traders struggle because they get analysis paralysis. They have all of the ideas set up, everything looks good, but when it comes to pulling the trigger, they're like, oh, okay, this may be too risky. Okay, maybe I don't necessarily know if it's going to work out. I have doubt. No one knows for sure if the trade's going to work out. All you're doing is stacking the probabilities in your direction so that you can have a better chance of finding a decent trade, right? So how do we do this? We create rules. If you create stern rules and shoot regardless of what you may think the outcome could be, you're actually able to get real data. You're able to build a sample size so that your review process is a lot cleaner. This is going to be my first tool of confirmation, right? When it comes to execution, a step between pulling the trigger and the analysis, the way that I view it, based on what we've talked about, comes from the delta profile. So when we have our analysis, we break everything down. If you want to trade the ETH, what I'm going to be using is the prior RTH. If I want to trade the RTH, I'm going to be using the prior ETH. So if I have this RTH to deal with, right, and I'm trading the ETH, what I want to do is the same analysis. So I understand there's a balance over here. We close back above it. We have an area between 580 and like 560, we can say. To see if we want to hold the continuation to the upside, the general target is probably going to be around 660. So I'm biased bullish. I want to see if anything can stack up. Now, the thing is, a confirmation tool is going to be delta, the delta profile. So how do we make sense of the delta profile and how do we make sense of what's going on? The delta profile here, what I'm going to be using is the clusters. So clusters of areas of heavy delta, negative or positive, are going to be a tool for order flow, right, to give me an area of key support or key resistance. So for instance, if we have this huge negative delta cluster that shapes up, and then we have this positive delta cluster. When I'm going bullish, when I'm trying to find some kind of buy momentum, I want to see clusters of positive delta shaping up as support structure so that I can actually get long in those areas. And that's for the continuation of the move. Now, this is based on the delta that is from the prior sessions. If I'm looking at delta on the current session, what I'm trying to do is find areas of absorption. So if I'm looking at the overnight delta and I see that there's a lot of people getting short into the lows, they're getting trapped, they're getting absorbed, that's where I'm going to be looking for the continuation to the upside swing. So as I'm looking at it real time, I want to see people getting absorbed. If I'm looking at it in terms of a continuation throughout the move based on prior information, I want to see positive delta stacking up for the buy side. I want to see negative delta stacking up for the sell side. So I want to understand where the delta clusters are actually situated so that they can generate some kind of areas of support resistance. So if I'm looking at this S&P even, so the S&P last night and yesterday, what we have is a huge cluster of negative delta into the close, and we have all this buy delta. So in and around this area, around 55, these large extensions of imbalanced delta, as long as we're above it, that's going to present even more confirmation from an order flow perspective to actually hold the area so that we can sustain and see if we can continue higher, right? It's going to be an area of pivot based on order flow. So when I'm looking at the delta profile, those are the key factors. I'm looking at where massive clusters are because those present order flow areas for me to find the continuation or the failure of the actual trend of the move. So if I look at the delta profile, right, I want to make sure that I know where the clusters are. So if you have this like cell cluster over here, I want to see where it actually ends. So the top and the bottom of this cell cluster. Is there going to be any kind of buy momentum in and around it if price is above to hold support? Because if price is above an area and there's a bunch of buying that was left behind, I want to look at that little buy cluster of positive delta from the prior session to hold us out, right? And then we start creating all this negative delta on the overnight, which tells me, okay, this looks good for the continuation to the upside. Is the same thing. If I look at all of this, this overnight for yesterday's session, and I'm like, okay, how can I create a plan out of this? Well, I know that there's a bunch of sell delta into the low. If we continue pressing this, you're going to get that move lower. But if I look at the sell delta above, right, it starts somewhere here, and there's a cluster over here. So that means from 660 to about 690, we have a 30-point area at the start of the cluster of the sell delta. So if we're below that, the sellers are going to be active from that region realistically. So there's not really too much buy pressure that's being created here on this delta profile. So I'm going to use that to really cement the areas that I want to trade. Now, the second aspect to confirmation, this is where we really pull the trigger. This is where the actual entries happen. So we want to talk about the delta footprint, right? So the delta footprint is for entries. We're going to be breaking that down for the NASDAQ primarily, but when we get into a trade, even before we pull the trigger, we want to understand what the potential of the move is. So if I'm getting long S&P, I'm getting long NASDAQ, let's say NASDAQ we get long at 580, S&P we get long at like 55. What is the potential of the move for the risk that I'm taking? We always want to understand that. So if my general target is around 650, right, what does that make? That makes at least 70 points. So 70 points, I'm risking 20. Does this make sense to me? Yes, of course, I'll take that trade. I'm buying 55. My main target is 72 to 73 on S&P because that's where the volume drops off based on this profile. Does that make sense, right? About 18 points and I'm risking 4 to 5? Absolutely. But if I'm buying, let's say, 610 on NASDAQ and I'm risking, let's say I buy 620 on NASDAQ and my potential is 30 points and I'm risking 20. Does that fully make sense? It's okay, but we're starting to get to the point where you have a lot of potential risk to the downside because we can go all the way down to 560, 580 for a limited potential reward. So I really want to make sure I understand that. Now to pull the trigger, what actually goes on? So if we're taking a look at some of the trades from yesterday, right? We take a look at what we did on NASDAQ, we'll take a look at what we did on the S&P. So let's take a look at these two trades. We can take a look at even these three, let's say, because, you know, there was some losses yesterday, but that's okay. How can we pinpoint these moves? So this first trade over here, it looks like a pretty good trade, right? But what is the deciding factor of pulling the trigger? When volatility is so high, you generally want to increase the stops a little. So maybe my stop was too tight because you can see this is a pretty good idea. I get stopped out near the bottom before we get a monster rally. So what was the issue with this trade? It's the same thing over here. I'm getting stopped out before we have a decent little drop, and then finally we pick out the long, not on full size because it's almost at the low tick. But what can we do and what can we review with these trades that identify the pulling the trigger moment? How do we pull it successfully? Because 2 out of these 3 trades, right, they're losses, but they look really good. They look like there's potential there. So what went wrong? Realistically, right, the first thing that went wrong with both of these is that the area that we have, right? So if we have an area, we want to get as close as possible to that region. That's why we put so much emphasis on the analysis of our distributions. So if I have a balance area at 440, right, and I'm getting long at 456, that's a 16-point gap in terms of where the actual area is. That means that if I want to do this properly at that point, I have to have a 30-point stop. That has to be my risk, instead of me risking 17 points, because then I'm getting stopped out as this thing's coming into the area that I care about the most. It's not like areas are going to be super precise, but if we can get within like 5 to 10 points on the NASDAQ within the area, that's going to make a lot more sense. It's the same thing here. Here I get short 622. Where's the area? 650. This is too big of a gap. It's nearly 30 points at that point. So I need to have a 40-plus point stop if this is going to make any sense. And what's the potential of the move? The potential of the move is 580 down to 560. So does that make too much sense from that perspective? I'm kind of going one-to-one. So the biggest error realistically is going to be based on where the actual area is and what does the order flow tell us to actually pull the trigger and confirm. So let's go over those 3 trades. What is the plan? How do we even come up with these trades? So when I'm looking at NASDAQ over here from yesterday's plan, we've got this area like this, right? We've got this area like this, right? These balances. So the idea over here was that we have a failure to accept under 440 balance bottom and we shoot back up, right? We can look at this delta chart as well. So we have huge sell momentum, sell, 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 and then they start getting absorbed on a head fake under 440, they shoot up. Realistically, the pullbacks into that region after that absorption should hold the bid. So the second test of the area to present a higher low, right, that's going to be the idea to actually hold that bid. So a head fake below the area and then rebid aggressively, get everyone trapped. Now we're looking at this and thinking, okay, from an order flow perspective, how can I pull the trigger based on this criteria, based on this move? What does it look like for us? So what I want to do, if I'm in this position, I want to take a look at the NASDAQ footprint. So number one, I'm looking at how sellers come through, right, into the lows, and eventually they burst through them, right? All this sell side gets erased by the buyers over here. There's a lot of people getting stuck. There's a huge buyer over here at about 450, right, that gets left behind. So when we come down into this area, what I want to do for confirmation is wait for someone to get trapped or a big buyer to come in and then start rotating and actually holding the bid from that area, and then I can look to try to get long at the bottoms of those rotations. So the issue that I had with this is I saw this massive buyer. When you have a buyer this big here on NASDAQ, 535, right, positive delta, that's huge. What you want to do is wait for them to push up, so this move up here to confirm that they're actually real, and then the bottoms of those rotations, if you wait for a second test of that area to see a rotation off it, that's going to be your entry. So I saw this guy and got in a little too excited without letting confirmation actually set in. It's the same thing over here. So one of the footprint tricks is that as prices go up and you leave behind huge deltas like this, those are going to be areas of interest to continue the move, right? So every time you get this higher low of all of this delta stacked up and prices shoot from it, that's going to be a pullback for the buyers to hold things out. So my secondary trade over here was I want to see if we can actually sell at that 650. Why? Why am I looking to sell 650? Well, it's the top band of this area, so it's the bottom of this major distribution over here before prices move up. If we're bearish, they want to find some kind of sell pressure from that area, right? So it makes sense from an auction perspective, but when it comes down to the actual execution, okay, how do we make this better? So you have a seller, you have this huge wave of selling from 640 all the way down to about 605. So that's great, right? I'm entering over here. Why is that? Because I'm looking at this seller that comes in and I'm thinking, okay, they can continue pushing lower. There's a major target down here, 585, where these guys were left behind that created this massive move. So what I'm doing, what I should be doing, is finding where the big sellers actually come into the market to create the move, the originating massive sellers to continue this momentum. And then when prices reject again the second test, that's where I could be getting in. So realistically, if I'm getting in at 640, let's say, based on these guys, maybe I wait a bit more, I'm going to actually get a decent little move even with a 17, 18 point stop. But instead I got in about maybe like 18 points lower than I should have, which really screwed things up. So if I'm looking at this, right, I'm going to be looking at the huge sellers that come in, that create a move, and then that originating seller that creates the move, the second test of that region to continue things. So over here we have this move down here like this, right? We have this huge cluster of these imbalanced guys, right? They're super stuck, and then they come into it, and what happens? You have a huge cluster again of absorption, huge seller, and they rocket higher. This whole area is an area that I want to be a buyer at. The second I see them starting to get absorbed, I'm trying to pretty much market into this area with stops below, because the potential of this move, if I'm buying 595, is at least 655, right? So I'm getting at least 50 to 60 points on this move on about 17 points of risk. And then this thing follows through, right? There's an eventual failure, but the idea is that as long as we have a move above some of these key balances, right? So we move back above this 560, 570 area, Now I'm trying to hunt where the buyers accumulated so that I can see the continuation of the move with the expectancy that there's some kind of failure from that area. So if I'm putting all of this together, right, I'm trying to identify where the actual balances are, where we are directionally from that, and then we start piecing things together. It all starts from an idea, generating a trade idea, and then from there actually getting the confirmation. If I have those rules in check, and I've broken down all of my rules like that, well, the only thing that I can do is try to follow them to the highest order and then pull the trigger so that we can execute. Whatever happens from there at that point, right? We don't know if the trade's going to be successful or not, but if we follow our rules, generally in the longer run, we should have more profitable trades than losses, right? It's just about one individual trade at a time. So when we looked at those trades, we looked at the revision of them, we can see those actual points of entry, those turning points, and what makes more sense to get in based on the actual triggers. So with that being said, right, I want to wrap this up. I hope you guys thoroughly enjoyed this video. Next video is going to be the last one of this series where we're going to be talking about how to grow as a trader and actually becoming profitable, what are the steps to take, and some of the challenges that traders face. And we'll be diving into more of that stuff. Now, if you guys thoroughly enjoyed this video, hit that like button, share it, subscribe if you're not already subscribed, and I'll see you guys at TRADEPRO Academy. And remember, we're launching our new futures course, right? An updated version, similar principles, but live, more concise, more examples, starting at the end of October. So if you want to get live access to that of the recording, check out TradeProAcademy.com and get that course. I'll see you guys there.